Hello, good morning, and welcome, ladies and gentlemen, to the Elite Traders Group Daily Morning Market Wrap. Today's date is the 15th of December 2011. We saw some pretty wild market price action last night. I'm just looking here firstly at the Dow Jones Industrial Average. As we can see, another pullback last night, settling down about 130 points on the cash chart. Now it's topped out at this resistance level. It's consolidating, and the chances of a Christmas rally now are declining quite substantially. Generally or seasonally, we see some upside within equities markets over the course of December and through to January, but we haven't seen as much confidence within the market. Now, last night's movements within the equities markets were obviously in the red, but even more so would be the commodities markets. For example, if I have a look at our spot gold at the moment and looking at the price action of that, we saw gold down more than $60 on the charts. Have a look at this. After a fall from grace from 1910 and then a low of about 1530 in September, we've now seen the last 3-4 days it shed from 1740 down to 1577. Now we are seeing a lot of downside within this precious metal. Most notably, if we bring up a moving average on this one as well, and even pop on the 200-day long-term moving average, you'll see that it's broken through that quite significantly. The question is it going to find support where it is? Now, we do expect a bit of a dead cat bounce in this one. We've been looking for opportunity to buy gold only as a call option because of the perceived volatility, but until it bottoms out and until we see at least a swing or a reversal, we're not keen to jump in just as yet. We'll be doing that either via call options on the XAU USD. You could also look at, which is spot gold, sorry. You could also look at the Spider Gold Trust as well. Now, another one to look at is crude oil, dropping $5 last night. This is what I mean by commodities markets really succumbing to this selling within the market. It's offloading of risk more than anything, any risky assets. Now, that fell from over $100 down to $95. That's the biggest movement we've seen within crude oil in quite some time. So it is looking very weak. What happened last night is OPEC came out and they reinforced the fact that they want to be targeting around 30 million barrels per day for crude oil, and as a result we saw the likes of Brent and WTI fall dramatically. Is it going to take out this existing support at $95? We'll have to wait and see today. Right now markets are very, very flat with low volume, so all we can do is wait. We're not a part of the energies markets right now. We're simply seeing too much volatility there. What we are trading though is we are trading soybean oil, which is looking very good. We're in about 100% profit now in just a matter of days. I'll put this on a 4-hour chart for you just for a moment, and if we have a look, we actually got in at this 49.15 mark, saw quite a bit of volatility with a stop just up here at 49.85, and today what we'll be doing is we'll be moving our stop loss from that 49.85 down to 49.15. That way we've got a break-even trade at worst. And once again, we're 100% in profit there. We want to see a confirmed break of this 48.50 mark. There's a lot of pressure on the grains markets. Look at soybean oil, soybeans, wheat, corn, you name it. All of them fell quite significantly last night. And I would say more than anything, it's in light of US dollar upside that we've been seeing, and I'll just bring up the US dollar index for one moment. As we can see, the US dollar has been performing quite strongly as of late. As all these contracts are priced in US dollar and we see appreciation out of the greenback, we also see the depreciation within US dollars, within the commodities. So this strength that we're seeing is putting a lot of pressure within the foreign exchange markets, being risky currencies such as Australia, and also within the commodities markets. Now, one last one, we've also put out recommendations on 3-month euro dollars. Technical trade more than anything, guys. We do like to trade this market shorter term and try to pyramid into it as much as we can. That means scaling into to the position. Now, if we have a look here, this is the June 2013 3-month Eurodollar. We actually entered this trade just up here, 99.27, a stop loss up here at 99.34. We've got a lot of room on this, and like before, it's hit resistance, the top of the channel. We expect a further swing of downside down to around a target of that 99.13, but we'll be looking at maintaining, reducing risk, and also adding positions along the way as well. So a very nice and consistent market. Hey guys, thanks very much for listening to the Elite Traders Group update for this morning. Look, if you're wanting to receive live trade recommendations, if you're wanting discount full service broking and some of the lowest margin requirements in futures, foreign exchange and CFDs in Australia or even internationally, contact us to subscribe. Don't hesitate to send me an email, dib@halifaxonline.com.au. My phone number's down there, both local and international, or at least for the daily reports. Don't hesitate to subscribe and leave a comment in the section below. Thanks very much for your time, everyone. We'll chat again tomorrow. Cheers.